Hi, I'm Alyssa Quill. I'm the CEO of Storage Asset Management.
Hi, I'm Alyssa Stiles, the Chief Marketing Officer for Storage Asset Management. But there's also been different pieces of the market in general that affected it. So inflation rate, demand, those type of things. Do you want to talk about how Sam handles those?
Yeah, it's interesting. I've been in storage now for 23 years. So like any business, there are up markets and down markets, valleys, valleys and peaks, and cycles. So when we bought the business and started the company in 2010, we were in a recession, and it was very, very hard for anybody to borrow money and get loans. So not that many people were moving households, and people use storage when they move. And also not that many people were buying self-storage properties and selling them because it was hard to get a loan to buy a self-storage property. So it was hard for us to grow as a management company at the time. And we had to be very creative in terms of marketing and to try to drive occupancy at our properties. But that was quite a while ago. After that recession, storage did well in it. Like most of the publicly traded companies at the time were about flat, maybe down 1 or 2% in same store revenue growth. We stayed positive the whole time. So compared to other asset classes, storage did well. What happened after that? Interest rates came, the banks started lending again, and people saw, big institutional investors, local people saw that storage industry did well in that time when other real estate classes didn't, and started investing in storage. And then we saw a ton of new development, which was exciting for a management company because we could grow, but it got tougher for some of our storage properties to maintain the rates that we were getting before and the occupancy we were getting before, because now they had new competitors in their markets. So that was happening in 2018, 2019. We were a little worried about what's going to happen. Again, we had positive year-over-year growth every year at the storage properties. So we've really never had a really tough market. And we were worried in 2019 about these new competitors and the oversaturation of the market. And then COVID happened, and so everything's paused for a minute. And then the world opened back up, and interest rates were very, very, very low. And people could work from home in more instances. And so people who had been thinking about moving, upgrading their house, renovating, moving across the country to Idaho because they can work from home, did it. And so the demand for self-storage, as you know, in 2021, 2022, skyrocketed more than we had ever seen before. So this oversaturation, these new properties that were built, it was like no big deal because they all leased up because more people were using self-storage. So it was fun, really fun. We had like 20% same store revenue growth, which was, I never thought I'd see that in my life. But what goes up must come down. It's hard, you can't sustain that. So now interest rates have gone up, and everybody moved already, and they have a 2.3% mortgage, and they don't want to move again and get a 7.5% mortgage. So we don't have as many people moving, and so we're seeing a slight decrease in demand for storage, which we're doing fine, but we have to work a lot harder for.